If you were dreading the new IRS 1099K rule, which would require you to report any income over $600 from third party apps and online marketplaces, well, guess what? You're in luck because the IRS has once again hit the pause button on the new 1099K form reporting requirements. So, in this video, Brian and I are going to discuss what this pause means for you, what the IRS has in store for 2024 and beyond, and what to do if you receive a 1099K form. Now, Brian, it isn't every day that the IRS gives taxpayers a big break like this.
Isn't that the truth?
Yeah, right. But this is the second year in a row that they've delayed the $600 rule after sending everyone into a tizzy most of this year, including us and our viewers.
Right.
So, what's going on here? Why the delay?
Before we dive in the details, I want to back it up real quick and explain where the $600 1099K rule actually came from.
Perfect.
This rule change was approved as part of the American Rescue Plan in 2021 and would have required payment platforms like your Venmos, your PayPal, Etsy, Airbnb to send Form 1099K to both the IRS and to users if their transactions exceeded $600 total in 1 year.
Mhm.
After considering feedback from taxpayers, tax professionals, payment processors, everybody under the sun,
Right.
the IRS decided to delay this much debated $600 reporting threshold requirement for third party organizations.
So, for the 2023 tax year, the IRS is considering it another transition year, meaning that the previous reporting thresholds are still in place, correct?
Yeah, that's correct. Payment apps and online marketplaces will only be required to send out Form 1099K if you received over $20,000 and have more than 200 transactions.
Okay. Let's now talk about 2024 because there are new threshold numbers people need to be aware of.
Yeah, as of right now, the IRS plans to implement a phased in approach with a new threshold of $5,000 starting in 2024.
Okay.
This means if you sell goods or provide services and your earnings from these third party payment apps or online marketplaces cross that $5,000 mark, you'll be getting a 1099K tax form in early 2025 for your 2024 tax year.
Okay.
For the 2025 tax year, the threshold would step down to $600 unless the IRS makes additional changes. And then there's Congress. They are currently trying to push forward with a $10,000 threshold.
Well, I guess time will tell what that number actually is. And if this provision from the American Rescue Plan just gets scratched altogether because it's a mess.
Yeah, and that's another reason to make sure you subscribe to this channel because when the new info hits the wire, we'll make sure to keep you updated.
Absolutely, we will. So, Brian, let's shift and talk strategy real quick. If
Yes.
you do receive a 1099K form, what are the steps to take to make sure it's accurate?
First things first, you're going to review it carefully.
Okay.
Double check the numbers and make sure they match your records. And now remember, we've talked on this channel many times about keeping very detailed records of all your transactions. Okay. And during this process, don't forget to explore any deductible expenses associated with the payments you received. Uncle Sam may cut you back some slack if you know these rules.
Absolutely. Where do you report this info on your tax form?
Good question. It depends on the nature of your payment.
Oh,
According to the IRS, if you're a rideshare driver, like Uber or Lyft,
sure.
and you're raking in some fares, you're going to report it on Schedule C. But if you sold personal items at a loss, you can zero out that payment on your tax return by reporting both the payment and any offsetting adjustment on Form 1040 Schedule 1. That way, you won't be paying taxes on money you didn't make. But on the flip side, if you sold personal items at a gain, meaning you made more money than what you initially paid, brace yourself for a tax hit. You'll have to report that gain as income. And yes, it is taxable. There's a
Hmm.
lot of misconception out there about paying taxes on personal transactions like your holiday gifts, sharing the cost of a car ride or a meal with a friend, or maybe in paying your family members or splitting household bills.
Right.
These transactions don't require any reporting. The IRS is primarily concerned with business transactions and income generating activities.
So, the $1 million question is who dictates what's personal and what's business?
Still not sure who separates these transactions out, but I'm sure we'll see because this is a mess.
It is a mess. It's an absolute mess.
I'll end on this. Just remember, reporting thresholds aside, all income is taxable and the IRS expects you to play by the rules.
They do. My concern here is we don't quite know what the rules are. There's a lot
We
of
don't.
gray area.
We don't. We don't. Still, 2.5 years later.
Right. All right. That is another reason, like we said earlier, to subscribe to this channel as IRS announces new rules or we gain clarity on some of these gray areas. Brian and I
Yep.
will be on top of it. Also, if you found the content of this video helpful, hit that like button, help us grow this channel, and do send this video on to friends, please. People need to understand what's in store for them, not just for this tax year, but also for next tax year.
Definitely.
Also, I want you to go and check out a video that we did on bank bail-ins and how it is now legal for banks to steal your money. Go check that out. We're going to have to drop the link in the description below. It's an eye-opening video, and I think
Very good
everyone
video.
needs to see it. All right. Well, Brian, thanks so much for this update today. Appreciate it. And thanks to everyone who watched.
Thanks, everyone. Have a great day.